What's up everyone? Welcome to a new video together with property developer FiveRocks. Tobias, thank you for having me.
Thanks for being here.
2022 is behind us. What a year it was. Quite different than the years before, especially for real estate. You're working in the real estate industry for many years now. How did you experience 2022 compared to the years before?
2022 was a tough year, to be honest. We experienced quite a cool down in the market, especially in October when we had the Expo Real, so the big exhibition in the biggest real estate exhibition in Europe. And you felt it there that a lot of people are nervous and are not sure what to do. And also in our projects, we experienced that people are not taking their buying decision very quickly. So they are being more distanced to taking the decision, and of course they experience quite long delays in the banking decision to take when they want to finance the projects or like their purchase. So it was a tough year, but at the end we also felt that people are taking the situation as it is right now, and I think we all know that it's not getting back to what we had 5 years ago with like 0% interest rate or 0.5 or whatever. So like the, in negative way, toxic interest rates.
Do you think that was necessary? Because we talked about this real estate bubble, and we'll talk about it later on, for many years now. Do you think this cool down was inevitable at some point?
I think so, yes, to be honest. So, because in the past we had the interest rates, which helped the people to take the decision in buying real estate. And I think now there are more factors, again, very important to consider when to take the decision to buy something. So, of course, location, then, of course, how the property itself or like the building itself is constructed, etc. Energy efficiency building. I think we will talk about this also later. But these are very important criteria to take into their consideration again. Mm-hmm. Not only the interest rates, which have been low.
That helped, right? That
yes,
people were just buying properties because it was so cheap.
Yes, and I mean, you saw it on the market. There were a lot of players came on the market. They had nothing to do with real estate or finance. So they jumped into the market and thought, okay, let's do real estate. We're becoming rich. But it's not that easy. And so with a new situation right now on the market, I think it was very necessary that it happened like this. And of course, it's difficult now. But now the people who are taking the decision as it is, or like the situation as it is, we will survive and have new opportunities in the future.
So the market cleaned itself, and now it's time to heal up and grow again?
Yes, that's it, in our opinion, and especially with our strategy, building energy efficiency buildings with a high standard of non-fossil fuel energy operations in the building itself. So I think we are on the right way.
Inflation is on an all-time high right now. We had more than 10% now for multiple months. Especially construction prices. I think we have a statistic where construction prices increased by about 25%, like especially steel and wood prices. Michael, how do you think, how did inflation impact the real estate market last year and currently?
It definitely had a very great impact on the real estate market as a whole. I think the biggest impact, first of all, was a psychological impact on the people itself, because I think the people basically all of us were caught by surprise. I mean, we had rising inflation all year long in 2022, and this was something new to get adjusted to for the market. So you had definitely a psychological impact that people were waiting and seeing what would happen. On the construction side, definitely, I mean, this is a problem that we have had not only in 2022, but especially in 2022, that we saw it with the companies that we are working with the construction companies, that there was really a difficulty to fix the prices. So when in the recent years you could fix a construction price with a company, I think this year we definitely saw that companies were very cautious and would maybe fix a price for 2 weeks or 3 weeks, and we definitely had to take that very deeply in consideration. So I think, inflation was the whole market was hit by inflation, and we definitely felt this.
2 to 3 weeks, that's incredible, because real estate is a long-term investment. And so we tell the people all the time that they should invest with a long-term horizon. But if you can only fix prices for 2 to 3 weeks, how do you deal with this as a property developer?
Yeah, this is definitely a challenge, and it was a challenge also in negotiation with the companies. Typically when you do a contract with a construction company, you want to have some time to negotiate, but oftentimes we didn't have this time, because we were told by the companies in 3 weeks we will have a rising price in material X, and so there's we had to hurry, and this was definitely the case in several negotiations. And in this case, it wasn't for every material. We also see some relaxation in some areas, but definitely this is something that we have experienced in 2022, and that will also continue in 2023, in the new year.
What we see as well is that more and more construction sites are getting cancelled. There's like a statistic that the constructions are getting cancelled. It goes through the roof. Do you think inflation is also the reason for that?
I do think it's part of the reason. It's difficult to say. Inflation is definitely one of the factors, but it's definitely the whole market sentiment that we have. It's definitely from the construction side that it's very difficult for developers to calculate the project costs, and that a lot of developers are buying time by just waiting and seeing. And the other side is, of course, generally the interest and buyer's market. So I think you have a whole market that is very difficult to foresee and to make a long-term decision. And by its nature, real estate is a long-term decision. When you enter into a project, it's definitely for a couple of years. And I think this whole market environment is very difficult to assess. And so, inflation and everything that comes with it is a major factor for the whole market.
Tobias just said that interest rates are probably not going to come down in the future. You mentioned the 2 rising costs, inflation and interest rate. It's a difficult question to ask because nobody knows. But do you have any idea, or how do you deal with inflation going forward? Do you think it's going to come back down or stay like this?
As you said, it's very difficult to foresee. In terms of, what we see for inflation within the construction prices, I do see, and that's, we talked about this. I think a lot of developers are now taking a halt and stopping construction. And ultimately, I think we will see it in the long term, and I think it will happen definitely in the second half of 2023, that a lot of developers who have stopped, this will trickle down, and also construction companies and materials will definitely look for some work. And in the last couple of years, all the companies construction companies were used to always easily getting contracts and finding projects, and I think this will change. And I think with that there is definitely an opportunity for reduction of prices also from the construction side. In terms of interest and inflation, we definitely have our thoughts on that, but it's definitely very difficult to predict.
You mentioned more and more properties are getting cancelled, or property developments are getting cancelled left and right. In simple economics, if there's less supply of properties, we talk about a bubble later on, but that would mean that prices can't go down or crash, right?
First of all, I think the developers are not necessarily cancelling yet. There are definitely some projects that have been cancelled, but mostly waiting. But supply and demand will ultimately, I think, play a role in the market. I think that's the basics of economics also in the real estate market. And I think we will have continuously high demand, especially for very energy efficient and good quality buildings. And I think that the supply will come down. And with that, I mean, I think there's definitely a chance for a stabilization of prices.
Interest rates increased last year all over the world from basically 0% after many, many years. And mortgage rates increased accordingly to almost 5%, then they're now at 4%, 3%, something like this. I think it's stabling down currently. How did the rising interest rates impact the German real estate market last year?
Yeah, it was a shock situation in the market. I mean, from 0 to 3%, it's a tough situation. And for us, it means, I mean, we started with our selling process in Willich, and this also means that the slowdown of the whole process happened. I mean, of course, when you from 1% interest rates to 3%, it's not that the banks say, okay, of course, we give you the loan anyway. So it's happening again that a lot of people are not able to afford it anymore. So of course the calculation is different now, and this is not only for us a big impact in the sales process, but the whole market is under attack. Let's call it like this in the hard way.
We see this when financing for clients too, that banks, it was easier to get a mortgage for 1%, let's say, and not just from your personal calculation, but also that the banks had made it easier to get a mortgage. Now it's 3%, but also 100% financing is not that easy anymore. Now they also want equity, so it makes it double tough to buy a property these days.
Correct, yeah. I mean, on the other side, it means also right now that people who are asking for buying real estate from us, we know that they are kind of solvent. So of course they have to show 30% equity, they have higher interest rates, and they have to have a capital income, or like an income, steady income per month, which needs to be higher than before. And so when people ask to buy, we kind of know that the financing is not the issue, it's just the decision process, which is now longer. So on the other side, there are not 100 people asking for one building anymore, like one apartment. It's maybe 20 people asking now, but the 20 people are more solvent. So for us, it's kind of an easier process now.
So it's actually not that bad, because there's just these 80 people, and we notice when talking to people and publishing real estate videos, of course, that a lot of people wanted to invest in real estate, but they weren't so committed maybe. And now you're saying these 80 people, basically, they just went away, but the 20 that really want to invest in real estate, they're still there. If the property makes sense, they still want to invest.
Correct, they're still there. I mean, of course, their decision-making process is longer. And for us as a developer, it also means that we have to calculate differently. I mean, our financing structure in most of the times is demanding like a certain rate of pre-sale quote. So that means before we start building, we need to show the bank that we sold 40%, for example, from the apartments. So then we get access to the bank loan, then we can do the construction. So, but if the sales process is taking too long, we can't start building most of the times. That means there's a huge delay in the construction process, and construction also depends on some weather influence, that we can't start building in every month of the year. So this is a huge challenge, and therefore our financing structure has to be different in the future, and we have to therefore also look for more alternative investment forms. And this is basically what we are doing every day. In this case, it's my job to check for alternative investments. And German real estate is one possible solution for this, where people or investors can say, okay, I like the project, I like the company, I want to be part of the whole process of this construction. And this is we are very thankful for this, that digitalization is making such solutions possible.
There it's actually good that interest rates increase, because your first token gives like 4%, which was unheard of. Now banks have maybe 2% something if you have a savings account, but then actually people can profit from the rising interest rate.
the investors, they can, yeah, of course. It's a huge opportunity. Yeah.
The major topic, this was all over the news last year, was in February when Russia invaded Ukraine. It's pretty crazy, actually, if you think about it, that a war in Ukraine, it's not even a neighboring country of Germany, that it had such an impact on Germany, the economics, the people, the politics all over Europe. How was the impact of the war in Ukraine for the real estate market in particular?
So the war, I mean, this was definitely a game changer. I mean, what we have seen since the war has started is inflation, what we have talked about, rising interest rates, what we have talked about, and of course the psychology of the people. I mean, you turn on the TV and every day you see these images from a war that is on your continent and not too far away, and I think it definitely scared people, mostly because, and also investors and business people as a whole, because it was definitely very, it was difficult to make any decision and to really know what is going to happen. So the uncertainty was very high, and what we have seen since February 24th is that inflation has risen since then. I don't want to go into how this came to be, but I mean, this is what we are noticing in the market, and also just rising interest rates. I mean, the central banks have risen their interest rates in a manner that we haven't seen for years, if not decades. I mean, there are a lot of people in the real estate market that haven't seen this kind of rate hikes that we have seen only in these last couple of months in 2022, and that might even continue. So uncertainty is mostly the biggest factor in all of this. A second factor, and this is something that Oleg touched on, is I think also not just the market, but also the humanitarian side. I mean, as horrible as it is, but a lot of people, I think it was the number 1 million immigrants from Ukraine that came to Germany and that are actively looking for housing, of course. And we are a residential developer, so this is our market and we want to serve these people. Of course, it's different kinds of people, and we also have to see what these people will do in the future. But definitely what we see now is that the German population is at an all-time high, as we have talked about, and this is largely due to the immigration from Ukraine that is going to continue. So we will have continuous immigration growth and population growth, and this is generally something that is definitely positive for the demand for housing generally. Of course, it will be difficult sometimes to provide that housing also in a good manner, but generally this is a more positive aspect. So I think generally, and there are definitely a lot of other factors that we could talk about, but those two factors are very big, and I think that the war has had a great impact on the market, and I think ever since this war started, the market has changed.
Usually uncertainty, you mentioned uncertainty is at an all-time high, like the population, and usually uncertainty drives investors into safe havens like gold or also real estate. Do we see the same here, or is uncertainty because of this war so crazy that people also shy away from investing in real estate?
I do think that, I mean, the real estate market is a little bit difficult because you have real estate does not equal real estate. I mean, you have different geographic locations. You have also different types of real estates. We operate in the residential real estate market. I think what people definitely have felt is the rising interest rates, just because you have to make, as a normal investor, take a credit, buy a house or an apartment, and you have to service the debt. So when you have higher interest, this is definitely something that people will feel in their monthly payment check that goes to the bank. And I do think that over time people will adjust to this. But this was, of course, in 2022, all relatively new, and people were caught by surprise, and I think a lot of people were just waiting. So whether or not real estate is a safe haven, I think we will see in the future. I do believe it is. I also think it is a necessary good. I mean, housing and living in general. And so I do think that people will also, with high inflation, look to get into safe assets and hard assets, which is by definition real estate. So I do think that generally the outlook for real estate is positive, but it will take time for the market to adjust.
So 2022, a year of shocks. Interest rate increased, shocked the people. Inflation increased, both from zero, shocked the people, and the war that shocked people, of course.
Yes, definitely. We have had in just 1 year so many new aspects to the market and also to life itself. And I think people are adjusting to it. And I think this takes time. And it's very normal that people are just waiting and seeing what will happen. And it's very stressful if you're in the market and you want to continue and grow the business. But I think it's just something that everybody has to deal with now. And so I think over time, I think we will see that people are adjusting to a new environment that will be more uncertain than definitely the last 10 years have been.
Everyone is talking about the real estate bubble all the time, and we published just recently many videos on the German Real.estate channel, and I'm saying all the time that I'm very skeptical about the real estate bubble, at least here in Germany. In other countries it may be different for various reasons, but at least here in Germany I'm skeptical that prices will crash down completely. But you're the expert, you're a property developer. How do you see German real estate in 2023 and maybe beyond? Are we in a bubble?
First of all, I don't think we are living in a bubble because we have so many factors which make it a bubble or not in this case. So if we go back to 2007, 2008, when the huge real estate crash happened, we had a completely different situation. And of course, the banks and the financial regulations, they learned from this, and we have now, in our opinion, a much more stable and regulated real estate market in terms of, from the bank side, giving loans and checking on people, are they solvent enough to buy the apartment or property or whatever. So first of all, I think this dramatically changed in a positive way. On the other side, we have so many factors on a macroeconomic side. We have so many people coming to Germany who want to live there. We mentioned it from Ukraine, of course, and other countries. We have a huge demographic change. So we are getting older, we are living longer. So the demand on real estate is different now. So, and this is my point, which I think we are not living in a bubble because we have to really look on the asset class. We can't compare a new construction with a building from 1995 or 1970 or whatever, which are completely different in how they have been built. Of course, main point is energy efficiency building. So in new construction, we are pretty sure there is no bubble happening in the next 2 years, because people are looking for alternatives. They have the base rent, then they have the additional costs, which now doubled because of the huge gas and oil prices. So this overhead costs are the new basic rents in the future. So in new constructions, if they have, of course, a higher basis rent, but lower extra costs, so people say, okay, I can calculate with this. I really like to live in a new construction, not in an old building where I have problems with heating. So we really have to have a look on different asset classes, and therefore I think it can happen that there is a bubble in for example, in regions of Germany where old buildings without any efficiency standards are still available, and this can happen. But I don't think in the top 7 cities or around like the metropolitan regions where we are doing our constructions, I don't think there is any bubble.
You mentioned energy efficiency and especially for new buildings, and the government is extra supporting actually that people invest into new properties, because the depreciation for properties that will finish in 2024 and beyond basically increased by 50% from 2% to 3%. So the government is actually incentivizing to keep real estate pretty stable.
Correct. I mean, it's absolutely right what you say. We have political support for new constructions, or we should to have it in the future. We have a green government which wants to be zero CO2 neutral, basically, and therefore the real estate market has to get some benefits to do new constructions. I mean, the real estate market is emitting 40% of the carbon dioxide in Germany, so it's a huge impact. Therefore, we need to do something in the future. It starts with renovating old buildings and doing like refurbishments, etc. But also from the new construction side, with higher costs for material and new constructions, we need to have some subsidies from the state.
And we need it, right? Because Germany needs 400,000 flats roughly each year. And we don't know the number from last year just yet, but the expectation is like 260, 270 something. So we didn't even reach it close. We have a huge backlog of constructions.
Correct. And now this year, 2022, we've experienced a lot of holdbacks of new constructions. There were less permits for new construction handed in. So, and this is the wave we will see the wave a little bit later. So in a few months we will feel it, that there will be less construction. So we need to do something in Germany to reach our goals, what the government prognosed with 400,000 apartments in new apartments.
I mean, we have been talking about this topic of a bubble, not just in real estate, but all asset markets for years. I think it was at one point in time inevitable that there would be some correction. I don't think this is a phenomenon that we will only see or that we are only talking about in real estate. I think we see it in other markets. First of all, not only also other asset markets, but also other geographic markets. And so some correction in the market is something that was expectable. With respect to the German real estate market, I think, as Tobias also mentioned, I think we have to look at really the concrete geographic market and also the asset class. There are definitely differences. I think all markets will be impacted to some extent, but I think we will definitely come back to some more of the elementary basics of economics, which is supply and demand. And I think markets that have low supply and high demand will definitely come out of this crisis better, and maybe even with more opportunities for developers and also real estate investors that find solutions to problems that people need. And I think we always have to remember that housing and real estate is an essential need for people. And I think we serve this need, and I don't see any reason why in the future there should be any change in that. And so I think this is to answer the question about the bubble. I mean, we may have some temporary problems or, let's say, challenges that we have to face, but I think long term I see a lot of positive aspects in the market.
I like that a lot, that usually people say it's a bubble and it's gonna crash, and that always sounds spectacular. But what you're saying is that it's maybe a local correction, okay, but that's actually healthy, and the investors and the property developers and everybody involved in the real estate industry that will adapt can actually grow healthy again going forward.
Yes, I believe so 100%. And I also think that maybe the mindset of the developers has to change a little bit, and I think there are a lot of opportunities. If you just think about the topic that we have been talking about, I mean, when you look at when most of the buildings in Germany were developed, and I'm just talking about residential buildings, most of them were developed in the 60s and 70s, shortly after the war, when we had a big boom. And this is roughly 70% of all the buildings that you have. And in the last 50 years, the construction has been lower and lower. And in the last years, I mean, you mentioned this goal of the government to build 400,000 apartments each year. We didn't reach it in the last couple of years.
20 years, actually.
Yeah, 20 years, yeah. So we were below this threshold, and I mean, it's safe to say that this 2022 and 2023, we safely won't reach this. So I think there's a lot of work to do, and I think also the old buildings will have to be refurbished and will have to be brought to a better energy efficient level. And I do believe that there's a lot of demand for developers who find solutions to the problems that we have in the market. And for that, I don't see a connection to a bubble or a market, because I think we as a developer also think about the product that we bring to the market, and I think there is a need for that. And we also talked about the people that are coming into Germany. We have a growing population due to immigration mostly. And so a lot of factors actually come together that are quite positive in a medium to long term. So we may have some challenges in the short term, but real estate is a long-term business anyway. And so I think for a developer who has a good grasp of the market and who provides good quality solutions, there's always a good opportunity, and this might be especially true in a crisis time.
We have a special guest, Oleg, for you expats, an expat investor. How do you see German real estate? What makes it so special?
I want to give some secrets about the investment in Germany, because it's a conservative market. A lot of people think that it's very difficult to invest in Germany, and it's closed market. And it's maybe first fake, because you just need to open the right door. And right door, it's maybe today crowdfunding platform. What you can find in internet, it's right door if you want to open it and invest your private money. It's a first that Germany is quite regulated market, and crowdfunding platform need to have BaFin. BaFin, it's a magic authority in Germany that you can do anything, and this protect you like investors. It's a first motivation because it's protected market. It's my first message why I invest in Germany. It's protected market, and by the way, my partners also can do anything what they want because it's a regulated market, and we need to have regulation. We should to receive approval, confirmation, regulation. And this is the main message, it's protected.
Doesn't it make it super slow though?
Sometime yeah, and I want to be honestly, because I want to be faster, because I want to do money by money. You know, money today costs more than money tomorrow, and I want to be faster. And okay, we have some recept how to do it in our company, but we still sometimes need to improve some process. Yes, that's right. It's sometimes it's little bit longer than you can receive in compare maybe with other markets. But anyway, it gives you security side. Its security side is different. And this is main message. And maybe second secrets, it is the main secret, what I want to say. It's for investors, just, it's my opinion. And you can print money in Germany. It's a very big secret. And €1, what you invest in Germany, if you do it right, you can do 3, 5, or 7 times.
How so?
Because it's money leverage financing from financial institutes. Germany have most developed financial market in the world. Okay, we have some ideas about US market, but don't know how it's working because, you know, people do exit, entrance. I also invest in the US market and can compare it. And today, what I want to say in Germany, if you do it right way, with good assets, good collateral, and you can show your funding, you can use €1 to receive €10 project. It's a maximum what I see in Germany now. If you're good investors and lucky to find good partners, I hope we can help with this, you can do 2-3 times per 3-5 years. And it's more than inflation. And this is one of the reasons why real estate, it's a most attractive market now, because all the rest market, okay, I have experience. I just share experience with you. My IPO portfolio this year, minus 43. It's just fun. Okay, I take US portfolio market with bonds, minus 14 investor. Take German real estate valuation company and growing the assets. Double growing for this year. And third, my opinion like investor, for be honestly with your audience and investors, what I do in Germany, it's most growing market in people, because you all time have positive region. People come to Germany. People want to live in Germany. People want to have Germany security. They want to work in Germany. I believe they want to work in Germany. They need apartments, and real estate in Germany, it's a future, because people all time growing in German market, one of the stable and growing. Okay, maybe it's not like a rocket, but it's also good, because you have prognose your market. You can do prognose for your company. You invest in today, and you have preliminary prognosis from exit of square meters. And today inflation, 100% sure, today inflation, today it's in square meters. And if somebody dream about drop the price in Germany, I can give you 100% sure it's never happened. Because today all developers put inflation to the square meters. And in exit, next year, we receive 10% plus, just because inflation on the market. It's my opinion about German market.
The German population, you mentioned like a rocket, is on an all-time high right now. And just from your home country, last year, we had more than 1 million people coming in. And this year it's expected to be 1.4 million. So the population looks like is about to grow like a rocket. And all these people need to live somewhere.
It's minimum what minimum, but it's all time. If Ukrainians, maybe some of them come back. But it's only just depend on the condition. If people have learned German and starts fluently speaking, I give you 100% sure that here you have more social security than any type of the Europe. I can compare with Spain, with Italy, with Poland, and with Ukraine. It's just my experience. Okay, Baltic country also I can compare. And sometimes it's more easily about language, but more worst about social security and medical insurance. And it depends what you choose. And what I see now is that people, citizens of Germany will be growing. I give you 100% sure. It's my opinion.
You seem to know a lot about European countries and also other countries in the world. What do you think is the most attractive European market to invest in real estate? Is it Germany or other countries?
For today, 100% sure German market, because it's conservative. Because it's they have the big, if you take today US market real estate, it's like, it's a jungle. You have 54% plus in 2022 or 21, and you have minus 35 in 2022. It's not a market, it's a game, it's like gambling, it's a casino and real estate market. In Germany, if you see, it's a slowly 7% per year, but it will be 7% per year. It's like American car. It's very beautiful, but when you see it, close the door and understood you're fake. But when you buy Mercedes, you see it, close the door in Mercedes, and it's Mercedes, these feelings about the market. It's also the same real estate. Yes, it will be slowly, but 7, maybe 15%, be honestly, because it's a very difficult year. But it will be guaranteed. 95% guaranteed that it will be happening in Germany. But in US market, Spain market, US market, what we research, Baltic markets, sometimes it's not so good prognosable when you want to do something with your money. I definitely should to always compare, and my suggestion to all investors to compare risk and profit, and profit ratio. Okay, in Germany a little bit less, but it's also profitability. It will be average is a bit better. Okay, in my portfolio, I won't be honest, Germany now 75%.
Well, Michael, thank you very much for having me. Thank you for the interview. How can people learn more about FiveRocks and connect with you?
Yeah, so we have a website. You can check it out on www.fiverocks.eu. You can get in touch with us via email, phone, and also please subscribe to our newsletter. We provide you with all updates to our projects and also everything that's ongoing in the market. We also sometimes bring out market updates and yeah, you can keep in touch. We are looking forward to it.